With the Airbnb IPO on the horizon, it looks like an exciting opportunity for us investors, but there's some serious things to consider, so you want to stick around for this one. What's up YouTube, this is Sankey from Stockflix. Now before I jump into my portfolio and talk about the Airbnb IPO, please do check out the link down below, that's Trading 212. Grab yourself a free share of stock worth up to $100. I actually had someone who used it and got a free share of stock of NIO, how cool is that? And if you saw my 2021 NIO prediction, that stock should double, so he's doing pretty good. So check out the link down below. Without further ado, let's jump into my portfolio. So guys, on screen is the YouTube growth portfolio on the road to 100k, currently standing at £41,000. That's around $50,000. Guys, the idea is for you guys to jump on the same plays as me, generate same good returns as me, and we both win, right? The stock market is very powerful, and I come on it each and every day just to show you exactly what it can do. So guys, before I talk to you about the Airbnb IPO, there's a few plays in the portfolio that we can capitalize on this week and make some good returns. So guys, first up on screen is Li Auto. Now last week, the Chinese regulators got involved with two Chinese companies and they wanted to assess their production and see how they're managing their business. This caused a bit of fear in the market and a bit of sell-off for EV companies, not only in China, but around the globe. Now Li Auto was one of the companies that got hit by this sell-off, but didn't quite recover. So right now, Li Auto is standing about just under $40 and they are about 17% below their 52-week high, which was around the $47. Guys, Li Auto, if you don't know, they are the cheapest valued Chinese EV manufacturer out of NIO, XPeng, and Li Auto. So out of those three, they're the cheapest on the valuation perspective. They're also very, very fast growing and they've got really, really high margins, right? About almost 20% gross margin. If you compare this to NIO, NIO has about 12% gross margin. XPeng has about 4-5% gross margin, so very fast growing, very high margin, and they're doing very well as a business. So this is an opportunity, guys, for us to jump in and buy some more Li Auto stock, because I think it's going to rise this week or next, right? It's going to creep back up to its 52-week high and beyond. So that's a nice 17% return on your investment, guys. So I'm going to load up some more Li Auto stocks. I want you guys to do that as well if you're holding Li Auto. Guys, next up is Switchback Energy. So Switchback Energy, they're an EV infrastructure player. They manufacture the charging points for the EV cars. Now this is a fantastic company. Again, they got hit by the Chinese regulatory intervention last week. They didn't quite recover. Right now, they're sitting about 8% below their 52-week high. Guys, this is a fantastic play. And next year, I forecast this company is about $60 plus. So this is a really, really good opportunity to jump in while it's below its 52-week high and generate 10% return on your investment. And hold this one for the long term because it's going to do well. As I've told you guys before, what you want to do is you want to diversify your EV dollar inflows. So what I mean by that is you not only want your passenger EV car inflows, such as your Tesla, your NIO, your XPeng, but you also want your commercial, and that will come from a workhorse or an arrival. But you also want your charging stations as well, your charge points, which will come from companies like Switchback Energy. And you want your battery manufacturers like a Microbus. So guys, you want to diversify that EV dollar inflow into your portfolio because the EV space is looking very, very good going into the future. Next 2, 3 years, 4, 5 years, the sector will really, really, really take off, right? So this is where you want to position yourself for future wealth. So guys, now on to the Airbnb IPO. Now there's three things I want you to consider before you throw cash at Airbnb. The first is the regulation. They are heavily regulated, similar to like an Uber. Now, when they first started, it was a free-for-all. But now the regulation is always changing and evolving, and it just creates a bit of uncertainty. Like they had to cut down the number of days you can list a house to 90 in London, and I think it's 120 in France, right? So it's just something to consider. The regulation is always evolving, and that just creates a bit of uncertainty going forward and pressure on the business. The second is their financials. They've never actually made a profit. Yes, they had a profitable third quarter, but they cut down marketing spend by about 400 million and laid off a lot of workers. So this would have relieved a lot of their cost pressure and created that profitable number, which obviously makes it look good for their IPO listing, right? Imagine if they listed when they came to list for their IPO and they had made a massive loss. The investor interest would be a lot lower than what it is now when they've kind of manipulated the results or changed their business model to actually look like they're a profitable business. They've never made a profit in any of their years in existence, right? They've also come out and actually said that their revenue growth is declining and they don't know, they're uncertain if they'll ever make a profit. Guys, this just causes a bit of concern. And it's similar to an Uber where they've never made a profit there as well. So I kind of compare this company to like an Uber, they're a good comparable. Imagine if a Neo came out to us investors and said, guys, I don't think we can, we might not generate a profit. I mean, do you think that share price would rise? So it's just something to consider as an investor, something just to really monitor going forward. Like, we want to see their Q4 results, you want to see a profit, right? You want to see a good revenue growth in their business in Q4. And guys, the third thing to consider is their experiences business, right? So this is another segment of the business that they've attached on, and it's not really popped off right now. In their IPO perspective, they didn't actually break down the results from this experiences section. They just lumped it in together with their new booking. So it's a bit of a gray area. We don't know how well they're performing in this segment. And this is a new business that's supposed to drive a lot of growth for the future. So it just causes a bit of concern, guys. And I just want to pop on screen the Uber share price for you guys, just a share price movement over time, just to see what might happen to Airbnb when it's listed. So guys, as you can see, Uber hasn't grown too much, right? It's had a pretty tough time over the last year and a half. Now, Airbnb might exhibit this, but what I think might happen is you might get a pop off in Airbnb share price, but then as they have cost pressures, growth pressures, you might not see that nice steady rise in the share price that we're looking for as investors. So guys, one strategy, and what I'm going to do, and what I suggest you guys do, is if you want to get into Airbnb, you invest at the start. They're coming onto the market with a low valuation. I think the valuation is about 6 times sales, when other technology companies comparable come in at about 10 times sales. So it's relatively cheap to buy Airbnb stock at the start. Now, if there's a share price appreciation, if there's a 20% uplift in that share price, what I'm going to do is I'm going to take some profits out between 75 and 50%, lock in my profits, and the rest of the stock I'm going to wait and hold and see how they perform on a growth basis and a profitability basis for the next few quarters. So guys, this means that you're just protecting that investment, right? You're making some money off Airbnb and you're hedging your losses. So guys, now on to the question of the day part of the video, and I have a question from Saif Khan. He wants to know, I have a $12 call expiring 2020 in January, and I'm up about 250%. This is on Neo. Should I take profit or should I keep the contract, right? So thank you very much for sending in this question. So guys, do send in your questions down below. I'm answering every single question. Now, if you saw my Neo 2021 price prediction, you'll know that I think Neo's going to $100 and upwards. So I think there's still a lot of room for Neo to grow. They've got some really fantastic things on the horizon. They've got new cars, they've got their international expansion, they're still growing and capturing market share in China, and they've got their second generation battery swapping coming out. They've got a whole host of things coming. So it's looking fantastic for Neo. $100 plus for 2021. I'm coming out with my 2022 price prediction video, so stay tuned for that. So I think the best thing is if you have capacity to hold a stock like Neo, hold it for the long term. It will pay off handsomely in the future, guys. So my recommendation, just to hold that stock, dollar cost average into it over time and really maximize the returns, because that's the way the world is moving into EV, and China are accelerating in EV at the moment. So guys, that brings us to the end of today's video. So thank you very much for tuning in. Please hit a like on this video. It really helps the channel out. I've got a lot more content coming for you guys. So do hit that subscribe button, become part of Stockflix. We're growing nicely, and I'll catch you in the next one. Take care.